Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
So instead of looking at, say, this here as just a trading range, drop down and look at the momentum within that trading range itself. And when it shifts, you can take that channel that shifted and use that as an entry trigger for a short setup. So basically, when this channel marked J here breaks lower, you would take that as a short. You can have a lot narrower stops using this type of market timing than you would a traditional breakout strategy. A traditional breakout strategy from a trading range, if this were a breakdown, would tell you that you need your stop above the high of the range and your entry needs to be below the range. Well, if you have this change in momentum within the range itself, your stop can be above that shifting momentum, and your entry can be when the channel from that momentum shift breaks lower, and it might not be the lows of that entire trading range. So you're basically able, in this case, you'd be able to take about 2 to 3 times the position size and still risk the same amount as you would using that entire channel as your entry and stop trigger. Let's look here as an example. This is one I've used older charts of this in previous classes for the ISE, and so you're going to see basically this progression over time where the last class I gave, we were looking at it coming into this low down here. And what we were looking at was that there was actually a shift in momentum here. There was a breakdown marked 2. And what you can see is that as this breaks lower in number 1, it starts out with the same momentum, but it doesn't keep that momentum. It continues lower, but the momentum has now shifted where if you look at this entire channel, which is marked here in red, you can see that the momentum has now slowed heading into this low here. And even within this this secondary move itself, the momentum shifts on that third drop. So we have a shift not only in this larger entire move, marked number 2, as compared to number 1, but within it we have a smaller shift in momentum as well. And that helps give this trigger here for that break higher, which took place very close to the start of December here on the EUI. And then there was a slowdown as it came into this congestion. Remember, congestion is one type of support or resistance, and this congestion also happened to correspond with this zone back here as well about a year ago, well, just over a year and a half ago. And so this serves as resistance. And even though there were some sharp back and forth spikes here at the start of the year, heading into January within this congestion, if you take that entire channel itself and transect that channel, meaning we're basically just trying to chop through the majority of the bars that are forming a trading range, you can see that there is a more gradual pullback here. And that, again, helps this form a stronger breakout or continuation pattern to the upside. Now what we're seeing, however, is that momentum is attempting to shift again. So we're seeing this slowdown as it's coming into this price zone here at 74, where the momentum is attempting to shift once again. And that would be very similar to what we are seeing here on D. And also what we looked at earlier, where I drew this template where we had that stronger upside move, and we had strong moves into previous highs, but the overall channel created a shift. So what we are seeing is that the euro here is basically coming into a zone where the momentum is starting to favor a shift or correction. And there's another type of reasoning behind this as well. where we were talking earlier about equal move levels as one type of support or resistance. And back here I showed you that example with this continuation here. Now when we go back and look at this EUI, what you can see is that there was this strong upside move here off of the low marked 2, that continuation move, and right when it hit that equal move resistance level, it slowed. That's where the momentum shifted. So it came into that resistance zone, but because the momentum was stronger than average going into that resistance zone, or at the very least average to stronger than average, it has that as a level where you will see some sort of reaction. In this case, it didn't fall into a trading range, and it didn't create a large reversal. Instead, it reacted to that zone by changing the momentum of the buying, but it is still in that general area. So this is a level where, again, I would be looking for a larger correction now coming off of this zone as that equal move level. We see a similar equal move over here on that breakdown marked B going into number 1. And you can see similar shifts in momentum, both in A here as well as B, where even though there were strong upside spikes within these upper sections here, the overall momentum of the buying changed and shifted. And it's the same type of thing that we saw down here, or if we compare that to the larger trend, it's basically a slowdown in momentum. And those are the things to look for when you're looking for reversal strategies. If you have something where the momentum is stronger than average to begin with, it is very rare that you are going to see a rapid bounce back. And if it does form a rapid bounce back, like it did here, well, there was a little bit of a change in momentum within this, but in and of itself, it looked like a rapid bounce, then that will create this V formation that will indicate that a longer trading range is most likely to occur. So previous highs are going to serve as really strong resistance, and a previous support level or previous low is going to serve as strong support. And that's what we saw take place basically here on the longer time frame. So it was like this E to F, and then it basically came down here and formed this for the continuation. So we just sort of chopped out that G and H in our template, but that basic same idea applied there. So here's a recent example, and this is the YUK. And what we are looking at here is another example of how shifting momentum, very similar to what we saw on the EUI, can lead to these reversals here. And basically here is our channel, so you can see that shift in momentum. And again, you basically chop that channel directly in half to show you how momentum is changing. And this leads to an initial breakdown. It creates this sideways trading range and then a break lower. And you can see that number 2 is roughly the same amount of price drop as we saw on number 1. So we have that equal move zone serving as a target level or support level. There's a third continuation over here, but it almost returns all the way to previous highs, and the middle of this congestion, again, right smack the middle of that congestion, serves as a strong resistance level. So we almost have a V low, but not quite. But still, it's close enough that this zone of this previous low is going to serve as some support, but you can see that it held, once again, that equal move target level really, really well. And so this basically completes this larger trend here, and it shows you how these equal move levels will serve as these target zones, as well as how momentum or pace can affect the outcome.
Thank you for participating in this week's session. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.